So let's start with, I will give you 1 minute. Maybe you can present what you're doing at the companies, what companies are doing, and especially to focus in the stablecoin ecosystem, what is the particular role or the focus of your companies in serving clients and so on. So yeah, maybe Filippo, you start.
Yeah, sure. I'm Filippo. I'm research and content strategy lead at Dune. So Dune is the data platform that basically makes blockchain data accessible and easy to interpret and use. We have extensive coverage over 100 chains, build curated vertical data sets around specific topics like stablecoins, RWAs, prediction market, lending protocols, like all these topics that we care about. And we have different delivery ways, like ways of delivering this data to institutions and enterprises so they can integrate this data into their workflows. So we have a Dune app with analytics dashboard, we have API, we have data share, so we can basically bring this data into different database environment of choice of the company. Stablecoins is super important for us. We built a new data set very recently. So we have a lot of headline metrics like supply, market cap, transfer volume, but we also have a very rich tag table, so you can see who is holding which stablecoins and who is sending to where, basically, so you can kind of qualify stablecoin activity. And we also released a non-USD stablecoin report together with Visa in March, and yeah, that was very interesting to go deeper into some not often covered topic in stablecoins.
I'm definitely going to explore them in a few minutes.
For sure. Yeah.
Miray, please.
Hello everyone, great to see you here. I'm Miray. I'm leading MENA region at OpenFX. We provide institution-level stablecoin and FX liquidity for cross-border payment use cases, working in multiple jurisdictions, currently processing $60 billion a year in 8 currencies. And like most of the volume we see is coming from the remittance companies, B2B cross-border payment companies, and we are totally focused on stablecoins. Great to see you all.
Hello everyone, my name is Emanuel Martinez. As you may know, my name has a Spanish heritage. So I'm the European Regional Manager for Kast, but I'm from Argentina, so I'm quite into the stablecoin side for many, many years. Argentina is one of the countries that teach us probably what is the meaning about a stablecoin and how you can use it properly. Kast is a stablecoin power app, basically based in, we are actually live in 172 countries with more than plus 1 million customers. We are powered by Visa, and yeah, really good to be here.
Hi everyone, Andrea from MoonPay, leading stablecoin partnership here at MoonPay. Quick intro on MoonPay. MoonPay is the operating system for moving value on chain. We have many different products that facilitates payments, stablecoin movements, crypto-to-crypto movements. Our goal is that to be kind of a one-stop shop for anything that has to do with value on chain. And obviously stablecoins is probably the most interesting assets right now to do so. And we have many different products that we're gonna speak about today on the stablecoins end. So very excited to share the stage with such amazing speakers in my hometown. So excited about this.
Thank you. And myself, I represent Hercle. Hercle is infrastructure for liquidity and cross-border movement. So I guess we're all united by the same goal of making the money flow very easy and, of course, cheaper respect to traditional rails. So maybe, Filippo, I can start with you. You can provide us a bit of more context, what you're seeing from on-chain data. As you mentioned, your report was focusing on local stablecoins. So, of course, everyone is discussing USD-backed and Euro-backed stablecoins. But what about some other use cases? Can you tell us?
Yeah, definitely. So first of all, everyone probably knows stablecoin market cap is over 300 billion, is about 330, I think, right now. 90% of that USDC and USDT, so just 2 stablecoins. If you expand to the top 5, I think it's probably over 95% of the total supply. So I think it's easy to dismiss everything else as not really important. However, we do think that non-USD stablecoins are an interesting story to tell. When you look at the supply, it's just about 3 billion. I would say 50% of that is Circle Euro and A7, A5, which is a very mysterious Russian ruble stablecoin. And then probably all the other Euro-pegged stablecoins account for 80% in total of this 3 billion supply. So it's still like very tiny percentage compared to the whole market cap. But it's very interesting when you look at adoption and usage. So you see market cap has grown 3x in the past year, but then the number of unique holders has grown 16x. And then the number of unique senders, so people actually sending transfer into these, like using these local stable coins, has grown 22x. And the transfer volume has grown 30x. So like, we think it's interesting that usage and adoption has outpaced supply and inflation, because that's a sign of an asset that is being actually used for something. When you see the patterns of usage, most of these stablecoins are clearly used for payrolls, remittances, B2B payments. So you have average payment size, for example, which is kind of small compared to USD-pegged stablecoins. You see, if you look at the daily transfer volume, you see very consistent and regular drops during weekends, which is again like a sign of a tool that is being used for real-life payments, not just DeFi speculation. And so, there are like a few interesting cases, like Societe Generale URCV has grown from basically 0 to 2 billion monthly transfer volume. JPYC has just been, the Japanese yen stablecoin has grown 50x because it was approved and kind of white flagged by the PSA agent in Japan. Avenia, BRLA, which is one of the many Brazilian real stablecoin, has also grown 20-30x in transfer volume. So there are many cases beyond Circle Euro, beyond Euro stablecoins, of local stablecoins that have grown considerably in the past year. So again, overall, it's easy to dismiss this as just a tiny fraction of the total. But we do think that local stablecoins are gonna see their moment, and specifically tied to very, targeted geographical corridors.
Super interesting. I'm especially happy for the thing that you mentioned, that on weekends we see the change in activity, so that supports actually that stable coins are more and more.
Exactly. And then if you look at Circle Euro, for example, you don't see this pattern, because like URC is actually being used a lot in DeFi as collateral lending protocols or Pendle or many other DeFi applications, and so you kind of like lose this very clear pattern of real world usage.
Let me pass to OpenFX experience in that field. So you are serving more than hundreds of corridors. How do you manage now the liquidity? How do you manage now all this flow between different countries? And how would you see also the stable coins maybe used apart from USDT, USDC, if so?
Sure. Right now, actually, we have a more pragmatic approach. We are focusing mainly on the USDC and USDT for cross-border payments. This is mainly due to the liquidity problem, because as you mentioned, the liquidity of the local stablecoins is very low. And when you want to use it for cross-border payments, the pricing, the spreads get super high when you want to execute a transaction, or the settlement can be delayed in multiple days. It can even be rejected. That's why we are currently focusing on the USD-backed stablecoins. But as you mentioned, there are so many use cases. We currently are working on the dirham stablecoin, which is being backed by the UAE Central Bank. And in this case, it also has a utility. So utility is the second problem that we see. For example, if you send a remittance payment to a Nigerian person, if the recipient gets the Naira stablecoin, and if they are not able to use it in the local economy, they need to off-ramp it again. So instead of removing the friction, we are adding another friction. So that's why we think the local stablecoins also need to be regulatory backed. In this case, they will have real utility in the real economy. People can use it for domestic payments. And we see this will be the case for the dirham stablecoin. So we're going to launch it among our portfolio of stablecoins that we offer. It will be able to use both in domestic and cross-border payments. So we have a framework to assess all the stablecoins, which wants to back, which wants to list on our platform. And it's depending on the regulations, liquidity, use case, which problem it's solving, who is issuing it, is it a credible counterparty, what is the reserve ratio, the transparency of the reserves. So many dimensions that we are taking into account.
Here I think would be very interesting to hear a perspective of MoonPay. So you're focusing on white label issuing of stablecoins. What is, first of all, your differentiator from other issuers? And second of all, where do you see like more traction? So I don't know, wallets are more and more issuing stablecoins. What are those directives?
Yeah, like I think I'm total agreement with like what Filippo said. The stablecoin landscape has been expanding quite a lot over the past few years. You know, we have the first stablecoins that launched like 2014, then they expanded during 2018, 2019. But the driver of like that demand was completely different than the driver that we have now. So now many different verticals of stablecoins are growing and burning inside the same kind of big family. Local stablecoins are one of those, and they're super, super interesting because, again, they can focus on a specific jurisdiction, on a specific use case, for a specific like geographical need. And then there is another family that has been growing a lot in the last 12 to 16 months, which is like the white label stablecoin kind of landscape, which is stablecoins that are mainly dollar-backed as of now, but they could also be euro-backed or whatever other currency in the future, that are purposely built for a specific use case, for a specific wallet, for a specific blockchain, for a specific fintech. Like, you have a lot of freedom to kind of customize your own stablecoin and make it so that it makes sense for your specific use case. So we are seeing that growing a lot in the industry lately, in parallel with like kind of local stablecoins. And we believe that that's kind of not the future, but the next iteration of like having a more customizable experience that is connected to your business, is connected to your use case for having a stablecoin. We as MoonPay, we try to make it super easy for someone to kind of launch a stablecoin and get that stablecoin distributed across our payment stack. As I said at the beginning, we try to be kind of a network of value. So we try to help people move this value, not only create this value in the first place. And the way we kind of try to do that is that we give you a very easy way to issue a stablecoin, but then we also give you a very easy way to transact this stablecoin, to use this stablecoin, to make it useful for your customers. And I think this is a very, very interesting evolution of the market because USDC, USDT, they're going to keep being the biggest stablecoin, I think, and they're going to keep leading the market from the sides perspective, but more and more use cases will grow, which will cater to specific needs that the existing ones wouldn't be able to do so. So that's kind of how I see the market, and I think next year, if we run this panel again to do the parallelism with the previous talk, we're gonna have probably 10x of white label stablecoins available for many different use cases that we cannot even imagine today.
Super interesting. Yeah, I anticipated the question and repeated this perspective, what we're going to see in 1 year. So please remember, in the next year we're seeing and proving that fact. We also had a discussion, Emanuel, about your new launch of Kast for Business. So very big announcement. Unfortunately, I didn't have any insights before I was asking, but you said we need to wait for the panel. So here we go finally. Please explain me, what is that?
Thank you so much, by the way. Can I add something for the questions that we had before? I'm one of the examples in terms of the stablecoin uses and remittances. Back in the day, in 2013 and 2014, in Argentina, we had one of the biggest crises in the entire history of the country. The inflation went from 0.1% on a monthly basis to up to 20%. Even in 2023, we had 2,500% on a yearly basis. The stablecoins, everyone started to run away from the currency, the fiat currency that we had, to a more hard currency. Back in 2013, when I started, I'm quite old, Back in that day, the currency, the hard currency was gold or Bitcoin. 2015, Tether started to be one of the most important things there, and they started to grow a lot. They wanted to launch some stuff in the Argentinian peso as well, but for the inflation and the liquidity was kind of a biggest issue. 2023 was a pivotal year for everyone in Latin America, and we started to see a huge inflow in the last 10 years for all the stablecoins from one place to another. Why I'm saying this? Because I started to send stablecoins back in 2017 to my family when I arrived to Europe for the first time, almost 10 years ago. Even my grandma uses stablecoin here nowadays with a credit card, with a debit card in Argentina. And the most important thing about it is that the local stablecoin are going to be one of the next, for my way, one of the next wave of adoption and introduction to the stablecoin system. Argentina's launching Argentinian peso, Brazilian are launching the Brazilian reais, Mexico with the Mexican peso, and all the correlation are going to be disclosed in many, many apps and as well many, many partners that we're talking about. Kast was created for someone like me, borderless, someone needs to travel a lot, need to spend the money, but at the same time, one place where everyone can be together. And this is regarding the retail side, but on the business side, we figured out, since we launched Kast, that many founders were having issues to open bank accounts, to send money from one place to another. I think someone had a question in the last panel about it, how to manage all the compliance issue, how to manage all the account side. Kast Business was created for the founder who has no reply, or they thought that they can create a company or go to a bank to open a bank account where banks were not created for someone like him. And Kast Business is in beta right now. We launched it 2 weeks ago. We are starting opening more and more country, more jurisdiction. Even if I'm the European regional manager and coordinating in the entire continent, I'm working globally with this because businesses are global. We are talking about stablecoins. We're not talking about stablecoins in Italy or stablecoins in Spain. It's global. The Kast Business is one of the new products that we are pushing a lot right now. We have a lot of feedback, a lot of interest from many, many founders. And I think that a lot of founders, if they're here, they will understand the situation for themselves. I even got 2 accounts closed from 2 different banks in the entire world from 2 of my companies. But I think that even if you understand that you're a borderless company on the retail side, B2C, B2B is one of the most important things as well, because we are growing all together. And there are no competitors in this place. We are all colleagues. And if that is okay for everyone and we grow properly, I think it's an open door for everyone there.
I will add one thing. I'm Turkish, so we are competing in terms of use of stablecoins because of inflation. And as you said, I mean, none of us are competitors. We are at different types of the stack. And I'm using Kast for 1 year. I can say it's great.
Thank you so much. This is not prepared, by the way.
It's not arranged.
It's so good to hear it. Maybe we can move also to the question of regulations and compare a bit, I don't know, UAE side, which is much more advanced in a sense than Europe. And in Europe, we see all this now struggle with MiCA, many companies getting closed. So again, to OpenFX perspective, how do you see later in terms of operational activities this change with regulation?
Sure. I've seen both markets. For example, Turkey, Argentina, these are the markets where stablecoin adoption is bottom up. It's starting from the consumer because people need it to save their purchasing power from inflation. In those markets, regulation is coming from behind, so the users are adopting it, but the UAE is completely opposite. There's no inflation problem because the currency is pegged to the dollar, but there it's a top-down adoption because there's a regulatory clarity. And what I see different, like huge difference between 2 markets, when there's regulatory clarity, the banks are more confident, the founders are more confident to start stablecoin-related startups. The finance managers in the companies, they are more, confident to explore stablecoin-based cross-border payments. So the whole ecosystem is growing around it. But for example, in the other markets, people know the utility, but they are scared to use it. Everybody's hesitant. Banks are hesitant. Finance managers are hesitant. Builders don't want to build. So it's a huge differentiation. And after I moved to the UAE, I saw like there are so many interesting stablecoin startups like RWAs. Everything is ahead of most of the markets. I think I wasn't thinking like this, but I saw it with my own eyes. I think regulatory developments is a huge driver.
So that's regulation perspective. Later, we have also a big issue about how we can attract and how we can incentivize, in a sense, TradFi users to start using the stable coins as, example, I don't know, of Kast, also of MoonPay. Maybe I can now address Emanuel. So you launched a cashback solution now. So you're trying to use that to gain more and more users to try what are stable coins, because apparently not many people know. It's weird. So tell me, what's your perspective later on after now launching? Do you see any results already?
Yeah, absolutely. Regarding the cashback side, we passed from a perspective on the cashback on a point system to a USDC, USDT system, directly straightforward. I think that the cashback on directly on stablecoin is a really good way to start incentivizing the adoption of the stablecoins itself. We are working in 172 countries and pushing a lot in different local payouts, and even, for example, if someone here has been in Brazil, they have a kind of QR system where you pay, you get a cashback as well. So it's not that you are not only paying in stablecoin, the stablecoins has been converted to the Brazilian reais, and then you're getting a cashback in another stablecoin. The cashback can be used in many different ways. You can incentivize, or you can pay for your next coffee with the cashback that you got for the coffee the last couple of days before. There's a really good way to incentivize new users as well. Cashback in stablecoin is something that many users in different countries all over the world have been asking for. Latin America is one of the main examples. A cashback in a hard currency. I know the dollar has inflation, but for us in countries like Argentina with 2,500%, 3% per year is nothing. So many Argentinians, Brazilians, they go directly to a refugee side on the dollar. So the cashback itself helped a lot to push for this adoption and for many, many new users as well. So yeah, I would definitely say that this is one of the most important things right now. And of course, the cashback is one of the main things that we have right now as a differentiator.
Cool, thank you. Let's move to another very big topic, and maybe Filippo, you can help us again to start it with more data part. The market consolidation. So as we discussed, we're having more and more stable coins, but though it's still more concentrated in terms of key players, in terms of users. What is on-chain data is saying to us, and what is your perspective in the future?
Yeah, I think we touched a little bit on this. To Andrea's point before, specifically in the data set that we cover, we had 15, 20 stablecoins back in 2020. We have 215 now. So it's like 7x in 5 years. As I mentioned before, 90% is USDC, USDT, so it's super concentrated. So it's diversifying, but it's also being concentrated, and this is not changing. And to Andrea's point again, I think this is not going to change. So USDC, USDT are going to be the stable coins that dominate global adoption in terms of stables versus fiat. I think there are still interesting spaces for new players to grow. And depending, so different stablecoins are targeting different markets, use cases. So again, you have USDC, USDT are trying to replace dollar fiat as a global general purpose stablecoin, right? And then I think in this case for like payments, remittances, B2B payments, payrolls, we will have local stablecoins that will cut for themselves a niche market. They're not going to obviously compete with USDC, USDT, but like they will be able to enter the market and consolidate their position, because first they will be pushed by local governments. So one of the flywheel that we found is that local governments have an interest in pushing local peg stablecoins because they need to, for example, use bonds for backing the stablecoins. So there is like a kind of flywheel between the demand for a stablecoin and the demand for government bonds. So this is one thing. And the other is because of integration. So we saw that there is a correlation between the growth of a stablecoin and the degree of to which it's integrated with local payment system and fintechs. So Brazilian real stablecoins are one interesting case because they are deeply integrated with PIX, which is the local national payment rails for QR codes and stuff. And they are integrated into other fintechs like Picnic. So these are all like apps like Revolut that enables people to actually pay with stablecoins. So when there is regulation and the support from the government and the deep integration with local fintechs, then there is a very powerful growth for these stablecoins. And this is one use case, which is, again, in real life payments and usage. Then we have some stablecoins like Ethena USD, Sky USDS. Like these are stablecoins which grown to like considerable size, just basically by being a powerhouse in DeFi. So they are extensively integrated in lending protocols, in yield tokenization like Pendle. Ethena, for example, just last week we did an interesting play with global dollar, USDG. So they essentially seeded USDG on Camino and Jupiter Land, so like two lending venues on Solana, for people to running leverage loops between USD and USDG. And the result is that in 4 days they went from basically zero supply on Solana to 600 million. So these are very powerful mechanics that play kind of natively on chain in DeFi. And as long as DeFi remains composable, permissionless, then anyone potentially can, come and, create these strategies, and probably they will see a very fast growth. So this is a second category of stablecoins. And then I would say there is a third, which is what Andrea was talking about, like white label stablecoins. So like, fintechs, banks, even companies, corporates like Starbucks, I think, maybe one day will launch their stablecoin. One thing is float economics, so you can make money from the yield and so on and so forth. And the other is kind of like a defensive play. So if you're a bank, you probably want to launch your own stablecoin because you don't want other people to, move your money out from the bank to other stablecoins or ecosystems. So even if it doesn't really play a necessary role for you, you will still have an interest in creating one. And so I think I totally agree with Andrea. We'll see so many new stablecoins related to very specific closed ecosystem use cases. So again, we have 3 different plays as I see it. Different stables are going to compete for different things. So yeah, the race is open.
Great. Andrea, passing the word to you, I suppose you have enormous amount of very interesting use cases on how you collaborated with MoonPay, with different companies launching the stablecoin or maybe developing other related use cases. So tell us about it.
Yeah, so again, I like a lot what Filippo said. Again, I think we have a lot of verticals in the same family, and this doesn't mean that a stablecoin is competing with another stablecoin for sides. For a stablecoin to make sense for an ecosystem, it doesn't mean that it has to be huge or it has to be worth billions. If you have a stablecoin for a neobank wallet, for example, it can be worth the AUM of the neobank wallet users and still make a lot of sense for both the users and both the neobank itself. Because for the neobank, they have more control over the UX, they have a new revenue stream, they control the asset, they increase the stickiness of the user because they can make sure that the user has another touch point with their ecosystem. For the users, they feel more attached to the brand, they have more incentives, they have more rewards, most probably because some of the economic float can be redistributed to the users. So there is a lot of very interesting customization mechanisms that are only possible with a stablecoin that is built on purpose for you. So that's why I think this vertical will grow a lot. And that's why I think it's not like more stablecoins just being added to the mix without any sense. It's more stablecoins being added to the mix for specific use cases and for solving specific problems. To your question, I'm going to give kind of a weird answer because I don't think we yet saw very interesting use cases or extremely new use cases for white label stablecoins because they're quite new. They were born like 12 months ago. So us as an infrastructure provider, but also issuers themselves, they're kind of still experimenting, trying to understand which is the best use case, what it makes the most sense for. Right now, most of the action is being seen in like neobanks, consumer apps that want to create a better experience for their customers, or blockchains that want to hold the stablecoin value rail in-house instead of like kind of giving that away. And also payment providers and remittances companies are starting to think to own the asset when they rebalance from one country to the other. But I think, as Filippo said, the very, very interesting use cases will start coming up in the coming years, where like big banks, big players, also consumer brands like Starbucks, McDonald's, instead of having like balances of points in-house, that they represent like a credit to buy a coffee or a credit to have like a subscription base, they will move to an asset which is compliant, which doesn't require them to have a banking license or a money transmitter license. They can just rely on some provider like MoonPay to facilitate that for them. But they manage to own an asset. They manage to create a financial experience inside a consumer app, which is something extremely powerful for like a consumer brand to expand into a financial brand and get more control over like the user value and the user potential, well, than moving value inside their ecosystem. So this is what really excites me of the next couple of years. And it's just an example. I think we will see stablecoins in places where we didn't imagine they could be. But that's the beauty of it. Like at the end of the day, it's a new vertical. We're building towards innovation. We shouldn't be scared to like experiment and be creative with partners.
Can I say something really quick? Regarding this, I think one of the clear examples is PayPal. When they launched the USDPY, they understood that they have the customers and they want to keep everything internally inside of their own ecosystem. But at the same time, I think that the biggest advantage of this for this company is to show them that they are part of the adoption. But yeah, I think in general, I would say to add a little bit about the things that we were discussing before, that's crazy that we are talking about this nowadays after all the things that we saw in the last year with UST, for example, and the Luna stuff that happened, collapse. And nowadays we are discussing how the stablecoins are growing. There's a really good, I think, feeling for everyone in the community to see that we can push the innovation and we can understand from our past mistakes and make everything clearly for everyone that stablecoins are in need, and mostly for many countries. Regarding the wide-level stablecoin solution, we see that as a feedback for many countries that are not part of the international financial system, or countries that are in the need for this because the currency or the fiat system is totally different than the one that we use globally. And I think that when you have the need, the innovation is coming directly.
Also, can I come back to your point about like stable coins? Would we actually see them as stable coins in UX? So do we push the users to, I don't know, intentionally move towards DeFi? Or are we moving more towards direction of sort of hiding them behind all the infrastructure? Generally would be interesting to hear the opinion of you all and perhaps, yeah, for future perspective.
Yeah, I think like it can be both. I don't think there is like a use case that is better than the other. Like Kast, for example, you hold stable coins, but you just see a dollar balance. So you are a customer, you maybe don't know anything about crypto, you don't want to like, you don't necessarily need to understand this from 0 to 1. You see a dollar balance, then obviously if you deep dive, you will understand that that's a stable coin, but it's not something that should be communicated to you right away. If you're making the example of like USDS or any Ethena USD, like more DeFi first stable coin, obviously you should know the asset super well because every single asset has some specificity on chain, some different risks, some different upside and downsides for the customer. So I think for the new stable coins and the new app layer that is going to grow is going to be more and more abstracted away because we are trying to cater to a new use case, a new broad kind of customer persona that doesn't exist today. But this doesn't mean that it's the only way to grow them, in my opinion.
I totally agree with you on this. I always make an example. I always give an example saying the situation with my family. with my grandma. She is 90 years old, and I had to explain her that she doesn't need to go to Western Union to take the money out when I'm sending the money directly from Europe. She can use her Kast account to go directly to the supermarket, buy her grocery alone, and she will only see the purchase in Argentinian peso, but behind of this is all the stablecoin system that is working for themselves. So for itself, this is a quite example of the growth in general. For sure, not everyone has the same need. There are someone who wants to go with a non-custodial way or something different, but we think that the next billion customer will be on the way that everything is simplified, straightforward, and easy to understand since the beginning.
Yeah, if I may also add, like, I think it's interesting, the so-called DeFi mullet. So you have centralized exchange, custodial solutions in front and then DeFi in the back, hidden from the user. I think this is very powerful because basically it allows for exchanges, especially, to compete with banks in terms of custody and reserves. So I can, deposit my euro in a bank and don't get much, but I can also deposit euro or a euro-pegged stablecoin on Coinbase, and then Coinbase will invest these tokens on Morpho, for example, as a collateral. And then part of those yield will be passed to me as a, accruing like revenue, basically. So I will have, as a user, an interest in leaving my money in a specific venue rather than another, which is a bank. And I think this is also why probably banks may want to be, trying with stablecoins, because again, it allows with like more flexible yield and treasury management solutions.
I have a different opinion on the white label stablecoins. I mean, I understand it's great for the companies, like they get yield on it, they issue their own stablecoins, they use it as a loyalty tool. But as a consumer, I think the money shouldn't be so fragmented, because I operated this like 4 years. When you have a stablecoin where no one wants to buy it, it's very hard for the consumers to liquidate it, because you need to convert, your money will be fragmented between different applications. You need to assess if this company has a solid mechanism to keep the current value of my stablecoin. So I think from users' perspective, it should be more simplified and it should be trusted stablecoins, because we saw many events, as you said, like Terra Luna or DPEG events we also saw. So I think we should be a bit more conservative on vetting which are the robust ones.
Yeah, like if I can jump in quickly, like obviously I agree at the high level that like fragmentation is not necessarily a good feature, but at the same time we're making a lot of progress as an industry in general in improving the infrastructure a lot. Obviously then it's on the company or on the app that decides to launch a stablecoin to choose the right infrastructure providers and choose the right players in the backend that facilitate a very easy and seamless conversion between like big stablecoins and smaller ones. And also when it comes to risk, if you choose like, for example, a Genius compliant stablecoin, then you're guaranteed that like that stablecoin follows a very straight set of rules, which guarantees you that it basically cannot depeg or cannot kind of create damage to your customers. But when it comes to fragmentation itself, like we got to a point where the connection between a new stablecoin and a big one got very, very easy from the on-chain liquidity perspective. There's a lot of technology like prop AMM being built, which are kind of off-chain infrastructures that make a new stablecoin inherit almost all of the liquidity of an existing one, and they kind of abstract that away to the customer. Obviously, these pieces of infrastructure, they are expensive to be built. They're not super wide, they're not super widely distributed as of now. But if you think about crypto, 2-3 years ago, it was kind of the same. Also, swapping USDC to USDT was very costly. There was not a huge amount of liquidity. So I think we will get there. Obviously, someone should launch a stablecoin if it makes a lot of sense for them to do so. You shouldn't just launch one randomly, but the infra is getting there to kind of really make it easy for people to then swap into those, in my opinion.
Also, one more thing, I think, for example, especially for banks, like if they, all banks will launch their own stablecoins, will have hundreds of stablecoins. I think banks will make sure that there will be a path where you can redeem stablecoins for, a fiat at one. So like even if there is no liquidity on a decentralized exchange, there will be like a preferred venue where you can actually redeem assets at full, right? So I think there will be also, as you said, like prop AMMs or kind of intents or kind of hybrid custodial off-chain solutions that will make sure that liquidity is there if it's needed. Obviously, you have a choice to go on DEXs because it's a stablecoin, so it's probably open. But I also expect that as more banks, companies, corporates will launch the stablecoin, there will be also kind of hybrids away from pure on-chain permissionless stablecoins to something a little bit more like a digital currency or something like that.
100%. Like, just super quickly, I don't think like a Starbucks stablecoin would ever have an AMM pool, for example. Right. I think it would all be managed in the back end by specialized exchange programs built on purpose. And that's it, because you would have no reason to trade in DeFi a Starbucks stablecoin, for example.
Well, we can see nowadays in Spain, for example, the 8 biggest banks in Spain are all together, working with the Deutsche Bank and Volksbank in Germany to launch a stablecoin just back to the euro. And we see that in the Balkan with some local exchanges and local banks. Even in Georgia nowadays, when they launch some things, Europe as a whole has different kind of stablecoins. Europe is a community of community, the continent, not exactly the European Union. But every one of them is looking for a different opportunity to launch their own stablecoin. I think the $1 million question is, how are you going to do that gasless from one place to another? And where is the liquidity coming from? If it's going to be private or just the central bank launching everything on the other side. We'll see.
And here, I guess we can switch to another topic, more, again, connected to consolidation. So there is this trend of super apps. Now users demand to have, all the features within the same UX. They don't want to switch. They want maybe even incur a bit higher cost, but at least have the simplicity that you mentioned. Maybe you're starting from MoonPay. You did lots of acquisitions, especially in the last period. So yeah, to name it, Meso, Iron, a couple of more coming. No? Okay. Anticipating that, what would be your super target, to acquire for the infrastructure part? Because you already developed this part, like bringing more players into your ecosystem. What would be something you would see developing, in 1-2 years?
Yeah, so that's a great point. And again, obviously, when you wanna offer more services, you wanna expand your offering, you can either make it or buy. We spoke about it also in the previous panel. MoonPay's vision is kind of to move fast. So we grow a lot by acquisitions to kind of build new products, expand our capabilities, and this makes a lot of sense in the idea of becoming kind of a network of value to support different use cases. So the idea is that we can get good teams, we can get good people in to strengthen our infrastructure in a very fast way. And for the example of stablecoins, for example, I don't think a stablecoin makes sense if you only launch it and you cannot distribute it. Distribution is everything. We spoke about it. If there is fragmented liquidity, if there is no way for people to buy it with fiat currencies, if there is no way for people to swap it to other stablecoins, then you're locking in users is something that is not useful for them. And obviously, we don't want to do that, and no one should kind of do that. So we try to build a network of different products which facilitates for a user to, yes, get a white label stablecoins, but at the same time being able to go out and in as best as they can without being stuck into the asset. So all of the acquisitions that we did play into this vision of giving users the most services as possible to move in a very free way. And some examples are like, we acquired DFlow recently, which is a very big swap aggregator on Solana, and that's going to facilitate a lot of in and out swaps from white label stablecoins that we issue to USDC and USDT. So the user is always free to kind of change. We acquired Iron, that is an infrastructure for making fiat to stablecoin payments, and that's what facilitates users to move from one stablecoin to their bank account, and the opposite way. So this kind of division, and we're going to keep going in that direction to make sure that the experience and the UX is always the best priority we optimize for, so that our customers and our partners and then the end customers can enjoy a very reliable and good UX.
Thank you. OpenFX perspective. So you're working in a bit different vertical in a sense. How integrated is your infrastructure? So I suppose you have some local partners in some countries, and you have some more native capabilities in others. What would you see as well, like your priorities in developing, within 1 year, and where you're the strongest positioning now?
As of now, currently we are processing 60 billion, as I said. This is across different countries, 8 currencies, 2 of them stablecoins, the rest are in Latin America, MENA, Europe, US, and Philippines. So we enable cross-border payments across all these corridors. We are, of course, going to add new currencies as well to the network. But for now, we are going to enable third-party payments and payouts. This is the first thing we are going to focus, and also a banking product, because we are currently working only with the licensed fintech players, and they also need a more friendly, crypto-friendly, stablecoin-friendly banking solution. So these are the 2 priorities we have at the moment.
And again, in terms of emerging markets, maybe you can expand a bit on that. So we see, lots of traction in Africa and Latin America, Southeast Asia. What about the infrastructure to actually serve the clients there?
Yeah, Latin America we covered quite well. We are present in Argentina, Colombia, Brazil, Mexico. So these are the current ones. Africa we are going to expand a bit later, but we are going to add Saudi and Turkey to the picture, because especially Saudi is a huge remittance corridor. We currently have lots of volume from UAE to the Southeast Asia, so we want to replicate it. India is coming as well. So yeah, these are the main markets that we are going to focus on right now.
Global. I think we're a bit coming closer to the end. Shall we focus on any specific topic that probably I didn't mention yet? Maybe Kast had something to add on your cards part. I think there's something to expand about. Also, I was personally curious between different levels, different subscriptions you're offering.
Exactly. Yeah, I can keep it short, so I can give you a little bit of time to my colleagues as well. The new cashback system is directly tied to the membership system. The standard one is totally for free, up to 1 to 5% cashback directly on Stablecoin. And we have 2 other ones, with the private being the biggest one. Each one of them is targeted to a different kind of persona at the end. If you are a freelancer that wants to send a certain amount of money or spend a certain amount of stablecoins on a monthly basis, there are different tiers that are according to your perspective on what do you want to use, on how do you want to use it, with different things. It's a kind of membership system like Revolut does, they do normally on the fiat side. And it's quite well, we had a really good reception on this. It's totally free for the standard side, and the other ones are quite cheap in terms of the cashback. The cashback paid for itself, directly the subscription. But one of the most important things is not only we launch this on the membership and cashback, but as well, talking about the next releases, we are planning to launch in the next 12 months up to 72 different payments in different countries in the entire world. We already have PIX in Brazil, Spain in Mexico, QR codes in Argentina. SEPA-in is coming. We are launching different kind of fiat payments in different countries. So you have the app directly to go from 0 to 1 as frictionless as possible, and since the deposit to the spending being one of the most user-friendly app.
Thank you. Let's recap a bit. Since the panel, the state of stablecoins, we went really, I think, 360 degrees, explored all the verticals. We've already anticipated what we expect to see in 1 year. You mentioned lots of new stablecoins. So that's the perspective. We mentioned new corridors. What is in general regarding the adoption? Filippo, we also discussed again many verticals, but maybe you could name like 1, 2, or 3 main trends that we will see.
Yeah, I think besides the white label stablecoins, so like individual banks or corporates creating their own, launching their own stablecoin, I think payments as a use case is going to be the most interesting trend in the next 12 months. This is something we also we're also going to track very closely. So we're going to launch a new version of the stablecoin dataset. Basically, on top of all the data that we have now, we are going to track all the payments, card payments, micropayments from agents, and so on and so forth. So I think we tracked stablecoins used in DeFi, stablecoins used as white label corporate stablecoins. But I think the race for kind of controlling the payment flows at a global scale, I think is going to be the most interesting trend. We have seen in the past year so many acquisitions by MasterCard, Stripe, and many others. And I think the play is the same. So they're all trying to create a full stack, full vertical. As Andrea was saying, they want to control all the venues, all the part of different user experience, so they can keep the user in their own ecosystem. And I think this is going to be the most fierce battle in the next year.
Exciting. If you have something to add to wrap it up.
Yeah, like super quick. I'm seeing more the B2B side of things. So for sure, for remittances, it will be new corridors. Currently, MENA to Southeast Asia, US to LATAM is very strong. There will be new corridors to that. B2B cross-border payments, import-export payments, this is booming, which I'm seeing currently. And from consumer point of view, I think more people will learn in stablecoins. So wherever you earn the money from, you are more likely to spend it from this channel. So I think this will be another trend that we will grow.
Last thing, I would say that definitely the next wave of adoption, on my point of view, will not be only on the retail, but on the business side. So I think that the next year, if we have the same panel, we will talk about it as well, and we will see many business founders here.
Yeah, and something else we didn't mention is definitely AI. So I think like the agentic economy and agentic payments, they're going to be a big unlock for stablecoins for a simple reason. Like stablecoins, yes, they can help humans, they can help businesses, and they're doing that today. But in certain countries, actual money, fiat money is working well. Like in Europe, for example, fiat money is working very well. So I like to use stablecoins for different reasons, but maybe my mother wouldn't. For when it comes to agents and agentic economy, stablecoins and blockchains, they're the only way for them to be able to pay themselves in a deterministic way. Because agents and AI itself is probabilistic, so they tend to like trip, they tend to like make weird decisions, they tend to have a lot of freedom. Obviously, if you prompt them well, they would make less mistakes, but the probability of making mistakes is very high. Blockchains are deterministic, so you can code rules, you can code structures, and you can create rules that everyone can respect. So I see a future where we're all going to have like a payment agent, which is going to hold some of our money, which is going to be stablecoins, and it's going to be able to spend this money for specific use cases. And it's going to run on blockchain, it's going to be run on stablecoins, because we as humans and as the money owners, we would want to give them rules. We would want to make sure that they can pay in a deterministic way, not on a probabilistic one. So I think that will be also a big unlock, also for businesses. So I don't think we will pay for subscriptions with bank accounts anymore. We will have agents paying for subscriptions and canceling and optimizing subscriptions in a very optimized way. And only stablecoins and blockchains can provide technological background to do that. So I think that's also going to be a big unlock as soon as AI keeps growing and keeps being more and more useful for us.
You can already do it, by the way, nowadays. So you can basically use Tempo and their MPP to pay for Dune. So if you run queries and consume credits, then you just let your agents handle everything.
I just want to highlight the amazing job that Tempo is doing on this. We launched a partnership a week ago with Tempo, Gas and Tempo to be in some way one of the routes to the payments directly to the agentic side.
Thank you again. Very insightful discussion. I hope everyone found it also interesting and perhaps would have any questions to our speakers. Can we give you the microphone? Or?
I'll just say it. So we're seeing the rise of euro-based stablecoin, right? So I don't know if we even need it or not, but do you see any other stable fiat peg, except for, let's say, PaxG or like, you know, a gold peg stuff? I mean, you probably have something to say. Does that make sense? From OpenFX.
Hi, yeah. I mean, we are currently working on the dirham stablecoin because the Central Bank of UAE has given authorization to 4 stablecoins. In the UAE, 3 of them has already gotten approval. One is from Zen Bank, which is going to focus on institutional payments and cross-border payments. The second one already launched is going to focus on domestic payments and already started to be used in Abu Dhabi for taxi payments, etc. The other 2 are currently under development. One is from Fab Bank, the last one is from Rak Bank. But I think there will be different use cases. For example, there are so many tourists, as you know, coming to the UAE or coming to the Saudi for, this religious tourism. I think people will be able to convert their local currency before they go to the country, just with a wallet. They don't need to open a bank account. And they will be able to get the AED stablecoin and will be able to use it in the local economy. They don't need to go to the currency exchange shops, pay huge spreads to exchange their currencies. I think it's a good market to watch for how the local stablecoins will be used in practice.
Any other predictions? From other candidates?
I can talk on the side of Latin America and Europe as a whole as well. I think the biggest question is, do they need it? And for example, Latin America, they need it. There are almost, in my country, in Argentina, is one of the most country with the biggest amount of bank users. Almost 30% of them, they couldn't have access in the entire life to a banking system. Back in the days, in many countries in Africa, they did an amazing job with this, even opening a bank account with your phone number. They know that everyone has a cell phone, but not all of them has a bank account. So I think the biggest revolution will be in places where there is a huge need for this. And then if the retail, it's not the one that is pushing for this, will be like the central bank, as is happening in Europe. So this is my point of view.
Yeah, from our research, we found Southeast Asia is super good corridor. Singapore, Hong Kong, now they just announced 2 official like companies that can issue an official stablecoin. What I think is interesting is also like the way you process payments changes according to different countries. Some countries rely on card, some countries pay with the phone. Most of the Southeast Asia corridor, they pay with QR codes. I think this is also kind of lowering the friction when you integrate stablecoin payments, because basically you can skip the payment, the card provider and the network provider, so you don't need to go through Visa or MasterCard. This is like another massive saving that you pass to the user. And so we see Southeast Asia adopting stablecoin payments very fast because of the payment method that they mostly use.
Thank you.
Any other questions? Yeah, please.
Yeah, so I had the luck in the past year and a half to work with a lot of stablecoins, and I sort of agree with Miray on what she said on the fragmentation for liquidity. Like, you already see it on some domestic currencies. There are a lot of frictions on the operation side and the rebalancing, so that kind of can expand on the white label. And I also understand the point of the appeal of USD stablecoins, especially for Argentina, for Turkey, where Turkish lira trades like a meme coin, essentially. So I kind of understand the point there. But I wanted to know your thoughts on why a currency strong as euro, for example, doesn't have such a strong presence in the stablecoin section. Like you said yourself, 90+% is USD, which is fine. I understand it for international, but why for Europe there is not enough traction for the euro stablecoins? And I guess this is mostly aimed to those of you that are actually working and you see the flow for Europe, Kast, for example. And we actually have issuers that are strong on stablecoins. We have Circle with URC. We have Tether that bought some euro stablecoins not too long ago. So I kind of wanted to know your thoughts why a euro stablecoin hasn't, picked up the traction yet.
Can I say something? I don't know, I will say from consumer point of view, not from OpenFX, Turkish consumer. So euro is super stable, dollar is super stable, as you said, versus Turkish lira, which has 50% and more inflation. So I don't know if it's the case in Argentina, by the way. In Turkey, it's easier to get a dollar bank account from the local banks. So people are used to buying dollars rather than euro. So I think it's what is easier for the consumer. They don't want to learn. Most of them don't want to learn something new. So they go with what they know. So currently the dollar fiat adoption in the economy is much higher. So they are going for the dollar stable coin because it's easier. They don't want to learn anything. This is like my 2 cents from consumer point of view.
Yeah, I think different reasons. Like USD stablecoins came first. Secondly, as we said before, like people want to hold stablecoins as a hedge against inflation of their own national currency. They used to do this with like fiat USD, and now they can do with like tokenized dollar. It's not the case as much with euro, I believe. Like, sure, some people hold euro for hedging, but I think mostly it's like dollar. And yeah, I think like in general, the use case for stablecoins so far until this year, the past year, has been mostly hedging against inflation. So you just store value, or you actually use it in DeFi, right? And as we said, there is more liquidity for USD pegged stablecoins, so it makes more sense to use those. I think once we have national regulations that we now have in Europe, as well as financial rails, local rails, and fintechs and banks and enterprises and businesses that actually accept payments in euro-pegged stablecoins, then you create that utility flywheel by which market makers will come, they create liquidity, users use it, and then I think we'll see a lot of growth in usage. But so far, for the use case that we had for stablecoins, which is store value or DeFi, I think it didn't make too much sense to have euro.
Sorry. And the last thing is almost 60% of the international trade is based in US dollars. And a part of this, we know that the first trading pairs in every exchange was based in the dollars as well. Of course, MTGOX used to launch it on the Japanese yen and many other exchanges back in the day. But the innovation, everything was coming from certain area. That's why using dollar to do the settlement on the currency. So I think this is important because the liquidity flew a lot on that side. Even some Asian companies are launching stablecoin back in the USD dollar. So I think this is one of the most important things as well. But Europe is growing, and EuroC is one of them. I think an amazing opportunity for everyone in the old perspective on the traditional finance in Europe to come to stablecoin.
Thank you, everyone. I would like to ask one very quick closing statement for you all on the state of stablecoins in 12 months when we are going to do a panel again. What do you expect? One sentence, very quick sentence.
Yeah, we slightly touched on this during the panel. I expect 2x the size of stablecoins, especially white label ones.
On my case, I expect to see display full of business founders. And I think the B2B side will be incredible in the future.
I would say currently the share of payments in the total, stablecoin volume is like quite small. We see from the research. I expect this to go much higher.
I expect one or more big banks to launch their stablecoin and basically drive adoption in Europe, as we talk about.
From my side, I would say we would not know the difference between stablecoins and traditional payments. That's our goal, as we mentioned.
Thank you very much.
Thank you, guys.
Thank you.